there are a lot of changes happening, and they're happening so fast that even we as a professional cannot digest it, like why they are doing it so fast, right?
We've had so many changes from the mortgage rules. I've been doing this business for over 3 decades, and I've never seen the changes we've seen basically in the last 45 days.
Absolutely. Hey everyone, welcome to October 2024 Economical Update. My name is Navjot Singh. I am a realtor with Realty One Flagship Group.
My name is Tracy Valco, and I am owner and mortgage broker at Valco Financial Limited.
First thing we really want to talk about is the inflation. Inflation came down, and I was a bit shocked. I wanted to see inflation going down, but when I see the exact number, I was shocked. And you are the first one I texted.
Good.
Explain a bit what is going on.
Well, the market expectation for Canada's inflation for the month of September, which is red in October, and which happened today, came in at 1.6%. The market was expecting 1.8%. So it is a big drop considering 30 days ago we were at 2%.
Yes.
So we're actually now in what I call disinflation right now. We're starting to go under what we should have as our normal base of 2%. A lot of that has to do with mortgage interest coming down. As we've been seeing, bank primes coming down, interest rates are coming down. But when we look at it, there still is high cost for us overall in Canada because we're seeing that food prices are still high.
Absolutely.
We've had some decreases from the gas pumps, but not enough to actually see some relief for Canadians, which I think is frustrating. So when we look at unemployment, that is what's been rising, which really will affect inflation, and we'll start to see why inflation is coming down. The employment numbers are not strong in Canada, and that has a huge effect on us. And we're still struggling with the housing market when we look at it, right? I mean, you're going to talk more about that, so I'll let you kind of lead the charge on that. But I think that this inflation report today will have a lot of impact on October 23rd, which is the next Bank of Canada announcement. And now the market's forecasting a 50 basis point reduction in bank prime.
So a week ago, we got the job numbers. Canada added 47,000 jobs.
Yes.
Our unemployment went down from 6.6 to 6.5%.
Yeah.
Right. And this week, we see the inflation going down by almost 0.4%. Which one is going to be the heavier on Bank of Canada's decision? 47,000 jobs or the inflation going down by 0.4%?
I think that it's a bit of both. When you look at the unemployment numbers, you have to look at too, what does that encompass?
Yeah.
We have, for some companies, they're shorter work weeks because they're not able to afford to have people full time anymore. A lot of these jobs that were created are not full time permanent positions. They're not even part time. So this is the problem where the numbers are manipulated to show a certain demographic of percentage of what actually we think employment is, or even unemployment, but it's not necessarily the reality of where we're at today. And I think that's what we're seeing in today's number with inflation at 1.6. I think that that will be a big indicator why the Minister of Finance will be pushed to do a half a point reduction October 23rd. But let's face it, that's not enough. And when we look at where inflation was in February 2021, we were at 1.8%, and bank prime was sitting at 2.45%. We're at 6.45%. That's a 4% difference in a rate. We need to see more drastic decreases in bank prime, period, going into 2025.
I hope that happens because I think Trading Economic is forecasting a 1.25% interest rate drop in the first 2 quarters of 2025. So hopefully things go in a positive direction.
And I think that to have that 4% drop, yes, you're right. Most market economists are not forecasting that. They're forecasting about a 2%. But when we looked at, I'm going to go back to 2021, again, bank prime was at 2.45%, but where were fixed rates? Fixed rates were sitting around 4%. And the market was still good. Like, we didn't have huge increase in values, and we were starting to stabilize. We've seen this before in the economy. So I think it's there's a balance there. And I don't think you're right. 4% is probably not realistic to where we're going to go next year. But 2.5%, I think, would be realistic to really help Canadians to be able to afford homes.
Yes. And the other thing is, like, even economists are confused because of the election. A lot of numbers are being manipulated, and the forecasts are changing. We are seeing, like, every other day we are seeing a new forecast.
Yeah.
So we cannot help it. It's all the political decisions which are affecting the actual economical market of the mortgage industry as well as real estate industry.
Exactly. And that's leading to our questions about all these mortgage rule changes.
Yes.
Why is that happening? Well, we've got a federal election next year. So
Absolutely.
this is why we're seeing so many changes and probably will continue to see it into next year.